Does take us to our talk of the tape, tech's amazing run, and whether that sector can continue to lead stocks even higher than they are now. Let's ask Jeremy Siegel. He is the Wharton School professor of finance and the Wisdom Tree chief economist. Professor, I always enjoy speaking to you. It's a great time to do it. Welcome back. What about this market? It just continues to defy a lot of odds, doesn't it?
Absolutely. It really tells you don't try to time the market, because it will fool you, and in the long run, it has a lot of positive forces. Listen, NVIDIA is an absolutely incredible company and deserves a $4 trillion valuation. What I'd like to see, Scott, is not just the producers of AI benefit so much. I want to see the users of AI, the firms actually implement the AI advances to cut their costs. And I think they're going to have to do it very soon, facing some of these tariff price increases.
Well, that's likely to happen, isn't it? I mean, you're also alluding to a tremendous productivity boom, are you not?
Yeah. Well, I think it's a productivity boom that is born out of necessity. If they're going to maintain their margins, and maintain their prices in face of some of these increases and some of these threatened increases, they're going to have to really implement AI. So this could be that kick in the pants to boost productivity that we all need. I mean, COVID, as I said before, boosted a lot of productivity using factors, just like what we're using right now, Zoom, which we didn't use beforehand. And AI might be exactly what is needed to counteract any price increases from the tariffs. I think now that the big tax bill is over as a story, I think tariffs are going to be the story of the third quarter.
In a negative sense? What do you think?
Well, I'm not, again, how well are the firms going to navigate it? It's going to be, starting next week. I want to hear how firms say their guidance is going to be for third quarter. And I think second quarter earnings are going to be fine. I always thought that any effect from tariffs really would not be felt until the second half of this year because of all the pre-buying that took place in that first quarter. So we're now, right in July. This is the time that if tariffs are going to have a negative effect, we will hear from it from the firms. We will, hear it from the consumer. And I think that that's really going to probably be a big part of our focus in July. If we don't hear much bad effects, boy, this bull market certainly, I think, has further to run. If we begin to hear, well, there's some hurdles that are harder to overcome, then we're going to see choppiness, I think, this quarter.
You feel like, for the most part, the market has become a bit desensitized to the tariffs, Professor, because it just doesn't believe that the president's bark is ultimately going to be as severe, in the end. That the bite's not going to be as severe as the bark.
Yeah, well, there was the famous taco trade. It still does, though, interestingly enough, move when he does speak of, higher tariffs. I mean, certainly we all have to discount it because he often backs down. Now, it's my belief that all countries that come to the table in some way, even if they haven't gotten a finalized deal, will probably be given a delay. And I think that is exactly what the market assumes. And if that happens, that certainly is a positive. But even at the current levels, remember, 10% across the board, selectively more. I mean, he threatened copper. I don't know if that's going to come through, but certainly, aluminum and steel, we already see those higher prices. So we're dealing with 10% base, 30% from China, maybe 40% from China. There's even at the best case scenario, there are hurdles. They are overcomable, but it requires work by firms, and I want to hear how they're going to do it.
I'm trying to think also, as you were talking about the boom in AI and productivity, and the like, I can foresee a scenario in which that doesn't sound so great for the American worker. It sounds really good for the American investor, because companies are going to have the ability to get leaner. They're going to be able to preserve their margins. They're going to be more efficient. People are going to be more productive. But the boom in AI itself is going to have a negative impact on the American workforce, like has been already discussed since this whole thing burst on the scene a couple of years ago.
Right. And the question is it more evolutionary or revolutionary? I mean, there were a lot of people, as we all know, when the internet, came on the scene in 2000, said there wouldn't be a single retail store by 2025. Well, here we are. Now, internet is, what, 1/3 of sales or close to it, but we still have a lot of others. And we still have a lot of other demands. And, you take a look at the JOLTS report, there's still a lot of job openings for those people. I think a lot of those people are going to be told, you increase your productivity by AI and you got a job. If you can't, well, then we'll replace you with someone that can. And I think that is going to be the force for technology for some time to come.